All right, happy Monday, everybody. It is the last day of the first month of the year. So we're here on January 31st, 2022, and we're going to go ahead and do our pre-market analysis here. Now, being that it's Monday, what I'd like to do is spend a little bit more time scrutinizing the higher time frames just to see what has changed over the last week in this. Well, as you can see, if we were just to step outside and look at the larger picture here, excuse all the lines again, being such big ranges, these lines are going to look very close together, even though they're 20, 30 points away from each other. So this was last week, right? Friday, Thursday, Wednesday, Tuesday, and Monday, trading within this, even though it was a wide range in terms of points, overall pretty choppy area here. So I don't think much has changed from the higher time frames, but we'll go ahead and take a look at what they have to say. So let's go up, and I'm going to bring up the yearly chart here, and that's just because of the relevance of the pullback here. So if we look at last year's price action, a pretty wide bar, I think we said what, just about 1200 ES points here. And then we opened and attempted to push to new all-time highs here just at the beginning of this new yearly candle. And as you can see, we've had this correction down to 50% of all of last year's price action, and it's only the first month of the year. So right now, holding just about 50%. Remember, the low was 12 quarter or 1275, I believe. 1275. So we didn't actually touch the 50% to the tick, but we're essentially holding above it for right now. So that's what the yearly's looking at right now. Really not much else I could say about that chart. And then our 3 month chart, remember each candle here is representative of 3 months of price action. We're still within this very bearish looking candle, and 50% of the current candle is this little dashed red line. I don't know if you can see it on the chart. It's just above the 44.93 level there, which is 50% of the previous candle. So we're below 50% of the previous candle. We're below the current 50% level of the current candle, right? So we're down over here at 4,400, just about 100 points below that midway point of the previous candle and of the current candle. So we're still down below there, and 50% of the candle before the previous candle, we've dipped below that as well, but we're now finding ourselves just above that. So on this 3 month chart, zoomed out here, as you can see, looking like some weakness in the charts, and these two 3 month candles definitely look fairly ambivalent, right? Closing just around at the midpoint there, pretty much equidistant on either side with the wicks. So definitely looking like there's a hiccup in the market. But what I'm seeing from my divergence perspective, looking at the RVI down here, is we are at basically the highs of this candle are all-time highs on the chart. And actually, now that I look at this, I might actually have to stop myself here. So the previous candle, if we just go back one, and I probably can't scroll because I've been having trouble with that. Let me see. Yeah, I don't know why I can't do that. So if you just look at the previous candle here, we were at, new all-time highs compared to, the last whatever 20 years of price action on the S&P. And down here, we were at basically one of the highs we've ever been on RVI. Of course, going all the way back to the swing highs here, you could make an argument, but it looked like everything was going strong here. We were pushing to new all-time highs. We were up in a very strong area of the chart. There was no divergence, in my opinion, up there either. But now, with this new 3 month candle, we've now pushed to even higher highs in price. But RVI, now that I just noticed this, is actually pushing lower. So we have not only the price action itself giving us the clue for bearishness, on that pullback, but the RVI now is showing us that potential weakness. So interesting stuff up here. Like I said, we retraced 50% of the previous year. Our 3 month chart is actually finally showing its first indication of divergence on that time frame. And now coming down into our monthly and our weekly here, there's really not much else to add. We still have the bearish divergence up off the top end here. We have the bearish engulfing candle on the monthly, We also have it on the quarterly back here on the 3-month. This candle is now engulfing the previous candle and breaking to the downside. So bearish engulfing on the 3-month, major bearish engulfing on the monthly. In fact, we've closed on this monthly chart. Remember, today's the last day for this candle right here. So today's going to be important to see where it closes. But currently, we're still, if it was to close at this instant, still closing below that previous bar. So all of this bearish stuff up here on the higher time frames, and on the pullback, I don't really have anything to really add. I don't see any type of bullish clue here on the monthly on that pullback. Let's go down to the weekly. And the weekly, we actually get our first bullish sign from last week. And so let's jump up here. Let's take a look at this candle really quickly. We've highlighted these type of candles in the past. And if we go back and we look at every time we have this huge wick to the downside on this weekly chart, typically we eventually see some type of recovery from there. It's not perfect, right? Sometimes you get a nice reversal candle like over here. Looks like maybe we'll go ahead, get that nice healthy pullback and continue to push higher. But they did end up breaking to a lower low and then eventually got that reversal candle here and then continued. So it's not like just because we see that candle, we're guaranteed a turn, right? But we're definitely getting another one of those really nice wicks to the downside with a nice green close, right? I use blue, just it's a color scheme I've used for a really long time. So we've got a nice green candle here with a huge wick to the downside on the weekly. So this is the first time frame that we've looked at that has a potential bullish clue. And if we look back to where we pulled back, remember that 42.12 was, if we zoom back here, we talked about this level before we ever sold off to there. Because if you look at back here, this is where we came up to, found strong resistance in the market, got this hefty pullback, and then came back, and when we pulled back right to it, bounced off, never came back, and pushed to new all-time highs. So that was the first level we were kind of watching. If we ended up breaking through this structure back here at that 42.62, I believe was the low. So once that broke, we had 42.12, and then there's a couple others below there. But it looks like that potential bullish indication on the weekly. Let's jump down now to the final edge of our higher time frames and see what this daily is showing. And as you can see, the last 1, 2, 3, 4, 5 days of price action stuck down in this little area over here. We're actually holding exactly a 38% retracement of the whole sell-off. So if we draw a fib from the all-time high at 08 quarter all the way down to the sell-off to 42.12.75, 38% retracement. Interestingly enough, you could have had this drawn on the charts back on the 24th, which I think was Monday of last week, and you would have already had that 38% retracement sitting right there at 44.40 quarter. And look at the high that we made on Wednesday there, 44.46 quarter. So we came up, we probed the 38% retracement by a few points and got the pullback, and have had trouble now at the end of last week to break out to the upside or to the downside of that range, right? So on the daily chart, what I'm noticing right now is, first of all, it's very hard to interpret all this garbage down over in this area. I think the most important thing that sticks out to me is the fact that we had this huge reversal daily bar back on, I believe that was Monday, if I recall correctly. Yeah. So back on Monday, had that huge sell-off, but then a really strong correction back up. And we've never come down to test that low. We've held within that bar, and we've actually attempted to now hold and continue to push. So that's the one thing I'm kind of noticing here from the daily perspective. The other thing that I'm noticing is that we do have the potential for a bearish divergence right now. So if price does not break that 44.46 quarter high, that little probe up into the 38% retracement, if it doesn't break and this candle closes, we will have a much significantly higher RVI level, even though price is lower. So we will have a potential bearish divergence there. This is not something that's really actionable for a trade right now, but I'm watching it. I guess the argument you could make here is if we don't break 44.46 quarter, we will have a bearish daily divergence. So I guess you could set up a trade and say I'll try it short, keeps a tight risk up above, and if they don't break that level, because they have to hold it basically to the tick. Although sometimes we do see them break by a few ticks or something, and then it just collapses. But essentially, you could make the argument that if it doesn't break, you could short that level and expect that pullback. But remember, this is a higher time frame signal. I don't know if we would rely on it unless the shorter time frames are also giving us a similar clue. So that's what we're seeing on the daily here, that potential breakout to get through 46 quarter and start trekking to higher highs. Now here's the thing. If the market does break out through 46 quarter, we're now pushing up into all the stuff we have up above, right? And so if the market does get through 46 quarter this morning, some of the larger time frame levels I'm watching are basically the major swing lows that we're pushing back up into. And it just so happens that at least two out of the three of those swing lows are basically sitting here with our retracement level. So we've got the swing low up here at 45.70, 275. That swing low up into, I guess, 45.80, 81. That little 10-point range right there. We also have this other 10-point range from just about the 50% retrace up to the swing low itself right back here at 45.20 quarter. And then we have this swing low. If we get through the 46 quarter level, the high of last week, we need to get through the swing low over here at 84.75. So we've got these three general areas up above. If they continue to chug from there, we'll consider some other levels, maybe up into that 46.06 area. And then from there, we're now pushing up into basically the all-time high territory again. And who knows what happens from there. So that's what we're looking at to the upside here this morning. If the market does start to sell off, remember we talked about 42.12, but then below that, we have, again, just about a 10-point range. Remember, we're looking at a high time frame here. So it's not like I can talk about ticks, 2 ticks looking at this chart. So we have just about 45, I don't know, 4160 to 4150. Maybe we could get that a little bit more accurate, but we'll have to go down to our shorter time frame. So if they sell off and they end up going 200 points lower and getting through the low of last week, that opens up some stuff below. But that's 200 points. I would think that by midday we'll be able to come back and reassess if something like that happens. So that's our high time frames. Let's jump down as we start getting down into the shorter end here into our intraday time frame. So this is what we're actually trading, is within the daily bar, right? So we want to look at previous daily high up around, I guess our orange line and our previous daily high are basically the same level this morning. So just around 44.25 is the previous daily high. Remember, 46 is the high of the week, and then the low of Friday was 42.66 quarter down here. 50% of that, just about 43.46, maybe 43.46 quarter. That's the little range that we're stuck in this morning. And this is kind of what I sent out last night to my members. It's a very crude representation of levels, but if you just zoom out and look at where we are in the chart right now, we are basically stuck within this dual chop zone here, right? That the extreme top end and the extreme bottom end, in my opinion, is a nice healthy chop area. You could kind of bifurcate that, and you have two basically equidistant areas here where the market is bounced and chopped around in for quite a while. So as we sold off, the fact that we came down right into this area here and basically chopped up and down where the market was chopping back at the end of the summer from last year, it's not too surprising, right? The fact that we're playing around within that very obvious range of price action. And I showed my members that we basically have these three areas, right? So there's the retracements, there's the swing lows that we talked about on the daily chart, These are the general areas. If we can get through the current chop block that we're in right here from 42.60 to 44.30, 44.40, we have again these three zones up above us that price is going to have to get through. And then once they get through that 61 retrace up top, we're now pushing right back into the all-time high area. So we've got these three general zones up above. Again, we talked about the swing lows we want to watch and the retracement levels. And then on the other side, if they cannot hold within this area and then push back to the all-time highs, or at least attempt to push up there, we have all this stuff below us. And if you zoom out and take a look, essentially each of these lines in a very general way are outlining these new areas of potential chop, right? So we have this big zone up top here, the two zones that we're in right now. If we get through the low of last week there, we have a couple of these choppy block areas, for lack of a better term, areas of balance in the market where the market seems to find some good value for sometimes an entire day or two and chops around, right? So from 42.12, that opens us up generally, like I said, what we say, 41.50 to 41.60 down here. There's a level just around 41.80 that might be in the way once they get through 42.12 there. And then that opens us out down to 41.12 and then down into 40.85, 40.80, and then a break of 40.80 kind of opens us up all the way down to 40.25, 40.26, somewhere over there. So these are the areas that will potentially be support if they break through the lows of last week and start to come down lower. So that's kind of the bigger picture. And as you can see, if the market pulls back this morning and we're still within this area, it's just going to be more chop. Probably not going to be an ideal area to be trading in. In fact, last week, even though we got some really killer trades in, I told my members in a lot of areas when we pulled back and started chopping, just to be patient and wait, because eventually we're going to get out of all this stuff and get to a nice trend or two where we can have some more high probability trades, or at least trades that have a higher probability of going further, right? Going for those larger pushes. So there's the 4 hour there, giving you that larger perspective. And then down on the hourly here, you can see I've got all our iLevels marked out, and it's pretty incredible that pretty much the market goes right up into these areas and finds support and resistance at these levels that we put on the chart way before we were ever over here. In fact, all the levels that you can see on here, again, they look close together because we are on a higher time frame, but a lot of these levels are 30, 40, 50 points away from each other. The closer ones are closer to 20 points, but essentially they demarcate. We had these on the chart based off of price action all the way back from the summer of last year. So coming back to now, these were all plotted based on price action from the summer of last year. And if you just go back and look at what happened over the last few days and weeks, we essentially come right into these areas, find support, find resistance. And of course, even in the choppy region of the chart where we've bounced back and forth for 4 or 5 days, we've been using these levels almost like clockwork. In fact, 44.15 quarter has been on an amazing level even coming into this week. So I want to just show you really quickly now that 44.15 quarter. Remember, we plotted that based on price action from the summer of 2021, and look at what happened here in the overnight session. So going into the overnight of last night, we came up, and this is a 10-minute chart, so you can't see. In fact, I'm just going to go to the tick chart here so you can see all the detail. We sold off in the Globex session last night, essentially held 15. It wasn't beautiful, but came up, fell below it, came right to it, broke it by 1 point or less than a point, and sold off for a beautiful sell-off right into the prediction point to the tick. And then a little bit later, I believe, I hope I don't have to eat my words. Oh yeah, and then here we are in the overnight session of last night, just around midnight, at least midnight Pacific. We came down and sold off right to 15 quarter, held it within 1 tick, and shot up another 15, 20 points and, held it for quite a while. And then here we are coming into our morning session here and still holding 15, held it to the backside, got a little peak above, and then fell lower. And this, again, this level 15 quarter was basically the high of the day last week, almost to the tick, multiple times. Got some really great trades off of it. So it just blows me away that these levels that are based on price action from 6 months ago or whatever it is are still extremely relevant in the market today. So I think that kind of wraps everything up. Let's go to the 10-minute here and just kind of look in this short time frame at maybe some of the retracements I'd be interested in. So we'd want to look at the entire push up from the low of the day before, which was Friday, going all the way up to the highs we made, whether it was in the overnight session or the highs of the day before, whichever was higher. So in this case, we did push higher in the overnight session, I believe right to 37.50 there. And so the pullback right now, you can see we held our 43.98, again, our eye level within a point or two there. I guess it was a little bit more than that. So it held it within 2.5 points, and we're trying to bounce right now. Deeper pullback brings us right into our eye level at 43.80, right the highs from that attempt to break out from Friday. And then the 38 is just a little bit below that at 71. So we have this area right here that very well could hold for the bounce. What I'm also noticing is that 50% of the previous day, our magenta line at 46.25, is lining up with a whole bunch of other stuff right in this little 3-point range over here. This was also an area of a lot of resistance at the beginning of Friday or the overnight session of Friday. So if the market comes down, it gets through that 80 area, gets through the 38 retrace, I'd be looking at this little section here between 47 and 51 as a potential area for support for that attempt to break out of, remember, the last 5 days of price action. So that's one potential scenario. These are some levels you want to keep in mind for the bounce higher. Of course, it's not impossible that they would come to our eye level at 61 and get some reaction to the tick or within a few ticks for a bounce as well. So keep in mind these levels I'm mentioning here, 80, 72, 61, this general area around 46 to 51, and then a little bit deeper brings us to the 61.8 retracement of the whole push, which also is this really strong resistance back here, and it's also an eye level and two prediction points very close together right here at right around 32 to 34. The actual swing high there, which they could come right to the tick and bounce from, is 43.3650. All right, so just to kind of shade these all in and make them very obvious for you, we've got that little zone right there. Unfortunately, this one's a little bit wide, but there's a whole bunch of stuff right there. We've got 61 because you never know, they could do like they do a lot of times, come right to an eye level and bounce right off of it. We've got the 38 at 43.72 and the swing high from Friday there, which happens to be our eye level at that 43.80, 43.80.50. All right, so that's kind of what we have below us here. Of course, each of these levels on the chart could hold. 24.50 could hold. They could break down. Actually, this right here at 08.50 also looks very interesting to me because we have a prediction point and an eye level sitting there. It was also another really strong support and resistance level going back to Friday there. So we've got all these potential areas where the market could find some support. Again, we don't know what's going to happen next. So as traders, all we're doing is adapting to what the market's doing and putting our trades in very low risk trade entries and seeing if we can get that follow through to our next expected area of support or resistance. So we're just to the open now. Market's going to open in 10 seconds. Going to be jumping down to my member section so we can see if we can get some trades coming out of the open. So have a great week, guys. We'll be back here on Thursday for another pre-market, and I hope to see you guys there. If you're interested in joining the trade room, and our weekly study sessions and all that stuff, just send me a message and we'll get you set up. So have a great trading morning, and I'll see you Thursday.